Welcome to the May 28th, 2023 Advanced Report for McGowanGroup clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman, and I'm also president, McGowanGroup Wealth Management, a team of 10 serving affluent families right here from the Crescent in Dallas. I look forward to our brainstorming session. When you're ready, just go to NetWorthRadio.com, contact us there. This chart is extremely important, courtesy of JP Morgan Asset Management. This is the federal budget, $6.2 trillion. And the debt ceiling negotiations were spurred by Janet Yellen that the U.S. is going to default. Well, there was a key step that she missed, and I'm going to show you what that is. Borrowing is $1.4 trillion. That's why they want to raise the debt ceiling. Now, we added up the most important things. Let's say net interest on the treasuries, got that. Defense, that's important too. Social Security, Medicare, Medicaid are supposedly sacred. And so, if we add those up, we get a difference of $1.76 trillion that are not in those essential items. Now, the House passed a bill that said, here's the Default Prevention Act, you just cover the most important things and then you don't cover what's not important. That's called a partial government shutdown. And of course, that hasn't even been on the table at all. In fact, here's the categories. Other, $834 billion. Non-defense discretionary, that means you don't have to spend it. $932 billion. Those two categories would leave the government in a surplus. That hasn't even been part of the debate. Now, the debt ceiling solution could lead to a big rally, and I'll show you the sign of that here in the next few slides. But aside from a debt ceiling deal, which nobody would want to be short the market or betting against the market if that were to occur next week, there's something even more important. The Dow Jones Industrial Average, spikes back over 33,000 on Friday. That was some traders not wanting to bet against the market in case the debt ceiling gets solved, which it more likely than not will. What else is happening? This is one of the Fed's preferred measures of inflation. This is personal consumption expenditures. So here is the trend. The two of the biggest months of inflation are about to drop off, potentially sending this below 4%. That would tell the Fed that they're 1% too high. Well, when the Federal Reserve starts to come down, this is 2008, the big meltdown, and they brought rates down in a panic, and right after that the market bottomed and began to recover. Similarly here, you could see what happened in 2018 when they stopped tightening, you got a rally. That is the pandemic. Why is this important? Right now, you're as high as you were in 2007. Arguably, the Fed was too tight then, and by their own measure, they're too tight. Somewhere between now and this time in 24, they start to lower the rates. That raises the value of investment assets. 17 months of torture during the tightening cycle that you see right here. Well, that could potentially end. The debt ceiling could potentially get solved, and that would potentially make investment assets much more valuable over the next year. What about the big recession? Not. This is Atlanta Fed GDP, which we cover nearly every week because they actually update almost every week. They bring all the data in, and then they tell you, based on right now, nationwide data, how is the economy doing? 2.9% growth, and the forecasts were for recession. Oh my gosh, that means things are better than expected in the economy, and that was true the first quarter, and it was true in the fourth quarter. Wow, that says the long-awaited recession is not here yet in the second quarter. Now, what happens to earnings? This is the pandemic right here. Wow, earnings went way down. They recovered. This was the 2018 peak, by the way. and you had an earnings recession. Even before that, we've had an earnings recession. Companies are coming in better than expected, and that's almost a normal. Well, here is the forecast. That's a 25% potential increase in corporate earnings between now and the end of 2024. Well, if you're compounding a good cash flow, this is the kind of market where you gain the compounding advantage, and potentially good news could bring you to a new high. I'm Spencer McGowan, President, McGowanGroup Wealth Management. We look forward to showing you our portfolio models and taking you deep into what the investment committee does every week to help our clients build great portfolios. Thank you for tuning in to Net Worth Media today and our efforts over the past 2 decades to educate clients and help clients make great decisions. That's the reason that we're here at YouTube McGowan Group, Apple Podcasts, Net Worth Radio, and networthradio.com. The Net Worth Media effort is designed to help you make great decisions and address value at risk of loss, fluctuation in the markets. Remember, if we talk about a security, doesn't make it a recommendation until you come down and get a plan from McGowan Group Asset Management, the team that cares. You can set a Zoom meeting or an in-office meeting at the Crescent, and we'll give you a written plan that encompasses what we believe to be the best allocations. This is a team of 10 devoted to you. That includes the research that you see each week from Reuters, from Bloomberg, and from the best sources. We always post links at networthradio.com for what we believe can help you make great decisions, the research that comes up. Now, the Net Worth Media effort is also designed to address cycles in the market, value at risk of loss. At networthradio.com, you can get the ADV form that shows, yes, we're a fiduciary, a registered investment advisor. It covers the costs of hiring our team to help you in the future ahead. It really helps to have an expert team on your side that you can reach by phone, email, and of course, a team that's here for you every week to address what's going on in the markets, because anxiety can often lead investors to make decisions that are either dangerous, chasing things, or selling things when they shouldn't. And that's a big part of our planning effort at McGowan Group Asset Management. Thank you for tuning in, and we look forward to serving you and your family in the years ahead.